The close, let's see, that was on at 10 o'clock on the 12th. The high in the E-mini was 29.39.25. Today's high so far is 29.33.75. I love the way this looks. Look, this is what I call left side, right side price time match. It took almost the same number of bars to come down from that 29.39 level to the 27.60 low right there. That's at 2760.25 at noon on the 14th. Starts a big rally, pulls back, and then continues last night, goes right into this morning, and then there was another big burst of strength. And look what we're doing right now. We're getting really close to that particular high. And what I like to do, I'm going to do this right now. I'll show you that it's a little late in the timing, but isn't this a beautiful technique? Look at this. Left side, now we've got the right side. I use this as a plumb line, the low. And where are we? We are just 120-minute bar late in trying to test that level. Lovely technique I show in my show at noon every day. And more importantly, what we are looking at is I use moving averages. Remember, Larry doesn't use moving averages. He's got his butterfly and Gartleys. What I am looking at right here is the MACD in the 120-minute chart on the right. Look how strong that is. Look at the stochastic. Usually over 80% is good. Every textbook will say over 80% is getting overbought. I say, oh, what are you talking about? You want to see it in that area. You want to see it in the 90s. You want to see it preferably in the mid-90s. 93% is really good. It means that any pullback has support unless certain key parameters are taken out. But when you look at the daily chart, the stochastic's only at 43%. And the on-balance volume, let me just get rid of this, got an echo right there. Look at this on-balance volume, the blue line. It gave a really nice signal for the high. And then the low was right there, that little V-shaped blue dashed line, turns up, pulls back quite sharply on Friday, even with that big move. And now you've got price holding very well. It is starting to test the orange 200 period exponential moving average right there. That's at 29.43. That's been resistance a few times now since the high that was made on April the 30th. And even more important is that if it takes out 29.47, that round number high that was made in the E-mini futures right there on the 11th, that's going to be really positive because it would designate that 29.65 round number high as a magnet. So, well, what are we looking at here? We're talking about the most important thing right now is that the 9-period exponential moving average of 28.70 is very strong support. That's important. Look at the Dow. The Dow made a high, I believe that was the 29th. On the 30th, sorry, on the 30th at 24,792. This is the futures, the YM. Pulls back very sharply to, this is very interesting, to Thursday's low. I'm sorry, was that Thursday or Friday? Thursday the 14th at 22,704. Starts a rally, continues that rally, and switches with those moving averages flipping one day negative and today positive. And the MACD is good. It's not great, but it is good. Stochastics way down at 36%. So there's in the den, we have a wonderful medium here, folks, the den, the Tiger Den, where you have just some wonderful traders and people just putting in their 2 cents worth. Sometimes it's a lot more than 2 cents. And someone just mentioned that maybe bonds are telling us that it wasn't just a short squeeze on Friday and Sunday night, that maybe it was something more. I said to her, I think you might have something there in the sense that the TLT, which is the Lehman 20-year T-bond fund, is trading down $1.87 at 164.84. Most of the time, historically, when the bonds pull back, yields go up and stocks go up, and vice versa. And in this particular instance, I talk about a rectangle formation. What is a rectangle formation? It means that you make a certain high point, pull back, make a certain low point, and then that creates the boundaries. And those boundaries can stay in place for a lot longer than your patience. And we've been in this boundary since the 30th of March on the daily chart of the TLT, stuck between about 170 and supported about 161. And here we are at 166, right in the middle of the range. So that's saying to me that bonds are not really the issue. And I've been telling subscribers and here on my show that I don't think that the Fed is really worried about the yields in relation to what's going on in the economy. I think most importantly, what the Fed is looking at is getting money out, and money out as fast as possible to be able to allow those 20 to 30 million people that have filed for unemployment. That's the group that needs to get money. And I'll talk about that in my show a little bit more. I don't want to take time right now, other than to say, are we looking at a break coming? Yep, there's a break. Other than to say, cash out to the public and to companies to keep things rolling is most important. Here in Massachusetts, we've got a governor who's decided he wants to be absolutely last in place. He doesn't want to make any decisions whatsoever. Just stay last in place to open the economy. Who cares? Well, that's not a good thing. I'll be back in a moment, Basil.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro-US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. I'm sitting in for Larry Pesavento. Trade What You See. This is Basil Chapman, host of the Tiger Technicians Hour at noon and author of the Opening Call daily newsletter. Look, we've got the E-mini, the 2-minute chart made a peak F. What does that mean in Chapman wave? I'll talk about that in a moment. But we've made some kind of at least a near-term top at 29.3375. This is a 5-minute chart, a peak E and a leg D. So far, it's got a peak D, but no real sign yet of a pullback in any of these. I suspect that a couple of things are going to happen. We'll talk about that in a moment. Let me just first tell you that in my work, let me go to this. Well, I'm only looking for 3 patterns. Straight up, straight down, that's 1. Arch formation, that's 2. Cup formation, that's 3, and a combination that I call the dreaded H, or the lowercase h pattern, where you come down sharp, you try to rally, you make this little arch formation, then you pull back and it's red because if you take out that left side low, you can keep going down. Green because on the upside you make a move straight up, then you kind of hang around, make a cup formation. If you take out that left side high, it's a reverse Y pattern, you can go higher. And the other thing is I put in here a rectangle formation. A rectangle formation can last a lot longer than your patience. In the Chapman wave methodology, we're also looking for, if I can just find it right here, 4 higher peaks. You can go higher than that. You come down sharp, you try to identify the lowest low bar. You count each successively higher peak. It goes from alphabetically uppercase on the way up, lowercase on the way down, from A through G, but it's at that 4th highest peak, A, B, C, D. At D, other things can happen. That's where you can get the deepest correction, or you can recycle and go higher. So that's the core foundation for the Chapman wave methodology. So let's see how that works in practice. You went to your D in the 2-minute chart, had a spike up as the MACD was turning down. And I had a question about this on my show recently. I never actually got to explain it, but that would have said go short because everything's turning down. The stochastic, the MACD. If you use my moving averages, you can see they held beautifully, and it kept you going right up until this peak F. Peak F is where you've got to be really careful. Peak E in the 5-minute and a D. So right at this moment, we're on hold until the opening. Let's get back to our story here. I want to get through everything. I had a question about oil. I'll get to that. So let me do this. I'll do them in the futures. YM up 740 points at 24,258. Hasn't taken out the high of 4 days ago, but this is really good action. MACD's flat, stochastic started from the bottom going up. So that is a positive, because what happens if the stochastic at 35% goes to that 80 or 90% area? You've got yourself a huge rally all the way to the 200-period moving average of 25,493. What happens if it's telling us, no, that's weakness with on-balance volume pulling back, relative strength just okay? What does that mean? Well, that means that you're in a trading band. We've seen a lot of trading bands, those rectangle formations. Basically, the Dow's been in a trading range since about mid-April. Look, it's just stuck between those ranges. So that's going to be important. What's important about this? A close in the next 2-3 days below 23,600, 23,500 support would be very negative. Say, you've used up the upside strength. Now you're going to start building a foundation for a base. In the E-mini, let's just go to the futures contract. The ES is in this. I think I want to go to the futures because I've got this all laid out. Look, in the futures, you've got this rising triangle formation that forms a wedge. And then what I'd said to my show and to subscribers, we should expect a cup formation. If it breaks decisively above the left side high of 29.65, this is the June contract, that'll be very positive if it closes decisively above that. But if it just stalls, it can go through a U to a W formation or double U, which is exactly what we're seeing. There's actually a channel being formed right here. So that says a break has to break below 27.60 was the low, 27.55. We'd say, this is all over. Now you're going to continue this consolidation. Sideways consolidation is going to go to lower highs and lower lows. At this point, this is very good action. Let's look at the QQQ, the NDX 100, trading at up 3 at 266.30. 227.93 was the high of the 11th. Remember, this has been a leader all the way. Today, it's a leader again, up 1.36%. This is very good action. The MACD turned negative, but just very slightly. Stochastic's down at 65. On balance volume, the blue line is good. And it's way, look at this, the green 9-period moving average is way above the black. And that says for the green to turn down, to go into a sell signal, probably a sell mode, you would have to see 211 to 212 on the Qs in the next 2 weeks. So far, this is very good action. Look at the weekly chart. It's so strong, V-shaped pattern. I'll talk in the relationship between 1929, people talking about those charts. And now, I've said for a little while now, I don't really see it anymore. Once we broke to the 51% gain in the Dow that from the low, that was a very good move. So the IWM, which is the Russell 2000, trading at 131.27, up 6.19, sounds fantastic. 4.95%. That's one of the better percentages. But look how deep the lower lows. This is Larry's A to B equals C to D. I call this Chapman wave 1-to-1. I don't want to waste time. It's a 1-to-1 extension to the downside. It's in exactly the same parallel move. That's very good because it says a breakout above or below changes the formats. And so far, the low that was made on Friday, that has to stay because if there is a close, it doesn't have to be a close. If there's a break below 116.50 and it's trading at 131.27, that'll be a big turn down. All right, now what I want you to do is to go to gold. Gold was up sharply last night, up sharply early this morning. Now it's down 7. And what I'd said, just subscribe to my opening call, gold has been great, but now it's starting to bump into resistance. Look at the resistance in the continuous contract from the 14th. The high was 1788.8. This is the continuous contract. Pulls back. And has an arch, remember the lowercase h, has the lowercase h successful, then it has another little one, and then it turns it into a cup formation. And that says this whole area of the whole 1780s is going to be extremely strong resistance unless there's a close in the 1803 area. Wow. And this is so interesting because, look, the GDX has been acting, this is the gold miners, acting very, very well. Let me just get rid of this for the moment here. Look at this, huge move. I can't believe that the GDX has gone from the 16s just 3 months ago to 30, what's today's high? 36.98 so far today. That is an incredible move. And what it is saying is, because look at this, the dollar is down just 23 ticks at 100.19. It's trading. Remember, the lowercase h can pull back, but if it holds the left side low, it can then make another arch. That's a lowercase m, and that m can repeat once again. This third one is going to be absolutely key for the dollar because if we take out 98 support, that's going to be very negative. If we go above 101.30, that's going to be very positive. We've got a break coming up, and then we've got the opening of the market. I'm going to get to crude oil in a moment. I'll just tell you right now, crude oil is up sharply at 270 at 32.21. I'll be back. Basil Chapman sitting for Larry Pesavento. Trade what you see.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David Wright has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Sorry, Larry was on the phone. I did not see the message until just a moment ago. Sorry, Larry. I believe you wanted to talk about, you had just a moment and you wanted to just have a quick update with crude oil. Well, crude oil is going very, very strongly up. The target would be the left side highs of 34.02 on the 9th and just a little high of 34.79 on the 3rd. So and this is only a leg C. So this should still go to a leg D because the MACD, the moving average, is strong, and the stochastics at 96%. Just, Al, if you see, if Larry's able to come back on, that'd be fantastic. I know he's real busy. So this is what I call a Chapman wave volume climax reversal right here on the day where it went negative $27. It went down in the crude oil to 6.50, and that was on the 21st. And that was the day that you had, look at this, you had 2.1 million contracts. No, more than that. It was 2.7 million contracts. And that's what I call a Chapman wave volume climax reversal. And that says that for the next, if it doesn't break immediately to a lower low, it says there's a really good chance that you can have 28 days of upside movement. And if it holds well above the low, that can turn into 56 days. So crude oil could be telling us that it's doing very nicely and that was at least a cyclical low that we made. And also says the key support level now is the breakout level of 27.21. Let's call it 27. And the support is the moving average is going down to 23.5. So that's really good action. And the other aspect that I want you to talk about was silver. So I had on my show about 4 sessions ago in the den, someone asked me about silver, and I said that was silver is trading at 1478, 77. And I looked at it and I said, wow, that looks like it's restarted. It's making the cup formation. It should break out. It looks really good. And that if it even touches 14.98 to 15.02, then that 200 period moving average, the orange line of 15.18, becomes a target. Well, it spiked on Friday way above that, and today look at that little sign there. That there is crude oil right there at $15.94. Crude oil. That is silver, SLV. That is the silver iShares. Once again, I'll say, Larry, I hope you're able to listen, and if you are listening and you're able to call again, so sorry I missed your call. I'd love to have chat with you about these things, and it's an honor to be able to do your show. As I said to the Dan a little earlier on, I'm looking around to find some big shoes. They're big shoes to fill, doing the best I can. So silver's acting very well. This is going to be interesting because the dollar is really a currency of fear, and as long as the XLF, the financials, were doing so badly, look, the 17.49 was a low around about the 23rd, where everything else was making a low, and all it was able to do was to go to the 23.5 area. Now it's trading at 21.87. I don't know. That's not a good sign. So let me go to a question I had here about the USO. USO is the United States Oil Fund, trading at 23.98. Had a little spike today, a gap up. It's 23.97, up $1.58. So I'm just going to say the pattern should be the same as crude oil. Let me just go to this crude oil once again. I just want to give a relationship. So in the crude oil, there was this gap, which you can see in the USO, but in the crude oil itself is the gap down from the close at the low on the 6th of March of 47.09. Next day, it just absolutely one of the biggest gaps. It gaps down. The high is 40.92. So 40.92, normally I'd say it should work its way up towards the gap. But I like to do one step at a time, and that step is, as I said before, this is 34.79, was it? Yeah, 34.79 high of the 3rd of April. If it can close above that, it's broken all the side, on the left side, it's broken all the resistance points that would be barriers. And that's going to be very important. So now in real time, we've got the Dow. Let me just go to this in real time, INDU. The Dow in real time is up 681 at 24,358. What's really important about this is that the high that was made on the 12th of 24,382 has just been broken. We're above it. We don't even have to close above it. As long as you break it, it means that this is a viable low at 22,789, at least for now, because the MACD is holding very nicely. It's still negative, minus 19 here. And the stochastic's running a little bit. It's a 39% on balance volume is very good, the blue line. And that's saying to me that I can take out this two lines. Look, that. Oh, let me just show you something here. You see I've removed the arch formation because something else is happening. We might even get an expanding wedge formation. You see this long-term trend line that went from about the 3rd of April, I think it was. Yeah, the 4th of, sorry, I reversed it to the 4th of March. So the 4th of March was a high of 27,102. There's a trend line that goes to the high of 24,764 on the 29th of April. And that was the resistance all the way up until today. It just took it out. So now this line I can take out, but I like to keep it there because it says that's the support if there's a pullback. So I'm going to say I'm making this now faded. I don't need it anymore. So I don't need it for now. By the end of the day, I might. That's not important. And this parallel line is no more needed because that was a trend line. So that trend line would say, if you were to break down from here, 22,789 was the low of 3 days ago. You take that out in May, and you're going to go quite a bit lower. But it depends on how high you go. And I'll just put this in as an afterthought. If there is a move this week above 25,100, I mean, that's incredible to even think that way. But if there is a move above 25,100, that's going to be all time. It is 2 months worth of trading into fresh territory. And now you're going into that horrible period that came in March when we're just coming down and down and down and down. And there are a bunch of gaps. So that'll be very important. And the weekly chart, if the stochastic in the weekly chart of the Dow crosses positive through Friday, that changes it from a buy signal to a buy mode. And here's the monthly chart on the right. Look at that beautiful green candle after just 2 months of horrible action, 29,568 down to 18,213, a minus 38% decline. Look what we've done. We've come back. And I'll do this just real quickly because I just want to show this here. That would be the 1920s comparison. Hey, I don't know why that happened over the weekend. You know, sometimes in technology I found, this sounds familiar that I should say this in Larry's show, that I had some technical problems over the weekend. So look, this is 1929. There was this rally to an all-time high of 386.10. September, the long weekend of September of 1929. There was a 185% gain. And then look what happens. It plummets down to the November low of 195, a 49% decline. And then a rally of 52%, but it took until April to get to 297. We just did that in one bar, in 2 months, in fact, we've gone to that. So I say there is no comparison right now to the 1929 charts as far as I'm concerned.
Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro-US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Folks, we're back, and don't forget, we've got great programming all day here at TFNN. And we're looking at a question about LABU, L-A-B-U. I'm going to look at the IBB. The LABU is the multiple of the IBB. This is the iShares NASDAQ Biotech ETF. So if you don't mind, I'm going to do that because I've got it notated. So in the Chapman methodology, remember, we're looking at straight lines and cups, so we've got a whole bunch of those. But I also like to use trend lines. Trend lines are so easy to use, and they give you so much visual information. So I'm looking at the gap down from the high of the gap down on the 9th. I'm using 114.14 on the NDX Biotech ETF. Then I'm taking the high that was made at a peak C on the 20th of April at 128.46, and I'm just drawing the line. And what happens, this is called a resistance line. What I've learned over the years is to take that line, I make that green, because a move above it is very important. It means you're breaking out. And then I do what I call an inside, Chapman wave inside track repellent zone. And this is a little thick, but I'll just use it for now. And then I color that. It's usually maybe 16th or maybe 3/16ths away. And then we look at the bottom line, the rising. This is a rising wedge formation, narrowing wedge formation. And this will get the red line and an inside track propellant or support line right there. So now it looks a little messy. I'm sorry about that. I'll try to clean it up. So what we have is, I'll expand that. Now you can see it much better. And it says the price right now up $3.12 at 135.37. Made a new high. I can call this just alphabetically. I can just go in sequence. I can call it a new leg F, just for convenience, F. I don't have to give alternate waves right now. That's an F. And it's inside the track that says this is where the price gets repelled. It could go all the way to, between today and tomorrow, somewhere into the 137 to the 137.20 area, but it's there. It's at the resistance zone. The MACD is good. Stochastic's okay at 67, not great. So this says to me, be a little careful, because it's getting to the resistance area. There's tremendous support if it pulls back to the 132 area. That's two or so points. And then it has to hold over the next week or so. It better hold the 130 area, because a break under that goes underneath there for the first time. That's a nice, easy way to look at it. But it's only a leg A from the 90s to 135, single leg A. It's getting really close just on the mathematical possibilities of continuing to a higher weekly high. It's already made one this week. Maybe next week it doesn't. So it says it's getting a little toppy. So I would just say, I'm not sure what the question was, but if you're in LABU, I would do this. If you've really got a very nice gain, although it can go higher, money management says to me, look, it didn't take out the left side high, and the LABU is the DX, this direction shares daily S&P biotech bull 3 times long. So I'm going to suggest, this is just a suggestion, but this is kind of the way I would do it for money management. You could take a little bit off right now. Now, if we know that it's going to go much, much higher to the 200-period moving average of the weekly at 64, it's trading at 53 right now, up 526, up 11% because it's 3 times long. I would say, wow, this is the time you want to pile in. This is where you want to buy another 1,000 shares or whatever it is. No, money management says you've got a fantastic gain. I bet when you went on Friday, when it closed, you said to yourself, wow, that's fantastic. There's no way on earth. I bet there's no way on earth for S&P and the Dan that you thought today it would be up 11%. You tell me, am I wrong? So I would just do this. I take a little bit off right now, and I say, you know what? I've had a gain of even more than I expected. But if it pulls back under 49 in the next 3-4 days, maybe that's where I could put it back. But I do want to take something off. That's just the way I would look at it, because congratulations, you really did well on that. Just a great, to be able to go to the 3 times long, showed you had a lot of conviction. You fulfilled your expectations here. It's in an area that says there could be some resistance, but it still looks fantastic. That's all I'm saying. So just money management says, you know what, just give yourself a little reward. Oh, you can thank Dave White for this trade. Hey, Dave, congratulations. Great move. Okay, so I had a question about, oops, where did it go? Where did it go? Yes, so within the context of what we're looking at, there are, yes, I want to look, the IYT, there's no relationship here between the financials are doing terribly, the transports are doing horribly. Well, the transports at 144, up 7, up 5%. You know what? It's still a horrible looking chart in the weekly and daily. What's the relationship to the Dow theory? Well, there's no real relationship. We're in a completely different world there. So that kind of is out. We just can't discuss it right here. What we can discuss is that the volatility index is trading at 28.47. It is still really overbought, just historically, but you can understand what's going on with so much uncertainty about the economy. The market is moving up now on expectations of many things, and a lot of it has to do with the Fed pumping money into the market. Into the economy, I should say. Maybe we don't know yet whether they're pumping into the market. They are pumping it into bonds. But what's really important is that the TVIX went to 1,000 on the 18th of March. 1,000. This is something that was trading at 38 just like a couple of weeks before. So that hysteria, that's selling pressure. I don't think we're going to see anything like it for quite a while, at least probably 600, maybe 550 on the next big climax of a major selling wave. But what's really interesting is that this is the speculative side. This is 3 times long the volatility index. Sorry, 2 times long the volatility index. So you have much more speculation than, say, on the VXX or something like that. And that says to me that the market is just saying that was out of sight. You can't expect that to happen very soon, and that there is a lot that's going on in the stock market itself that's very good. But the thing is, look at Amazon. Amazon is down 16 today, 23.92. This is telling us that maybe the economy is close to getting on, because Walmart comes out with its earnings tomorrow. And look at where did it go? Walmart is up 74 cents today at 126.68. The all-time high was just last month at I believe it's all-time 133.38. Let me just check. Is that an all-time high? Yeah, all-time high 133.38, and it's trading at 126. That's much closer to the all-time high than any of the most recent pullbacks. So that says this is acting very well. When the earnings come out tomorrow, we might find that it's a lot better than everyone thought. But at the same time, we don't know about expectations, because what if if the grocery stores and other places that really compete, I don't know if anyone really competes with Walmart, because Walmart kind of competes with Amazon, but they can't even compete with Amazon. So we're just talking about opening venues that will take a little bit away from Walmart. That might be the expectation, but as it stands right now, I'll just tell you that if tomorrow, when Walmart's earnings come out, if it closes, not what it does after the market or the next day, it's what the market says it likes or doesn't like. If Walmart within 4 days after the earnings comes out and it's below 120, and it's trading at 126 right now, that's going to be a pretty negative sign. If it's up in the 128 to 130 area, that's actually very positive, and that's actually quite good for the market overall.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the opening call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So, in other words, Paul, to your question about UCO, yep, I like it right now. I think it should still go to a leg D. Just real quickly, the 2-minute chart made a peak D. Remember, Chapman wave peak Ds pulling back quite sharply, so that's now in a sell mode. But this is the 2-minute chart. The 5-minute chart just given a signal. It hasn't even confirmed really a sell signal. And the 10-minute chart is only a leg E. We have to see how it pulls back. But a move under 29 is a 29.27. A move anytime in the next 2 hours under 29.18 says we've probably seen some kind of a shorter-term intraday top that we need to monitor. Now, I just wanted to show you this real quickly in the Chapman wave methodology. We're looking at gold. This is Chapman wave automated resistance levels. 1764, a lot of resistance there. 1735. Is now some kind. It was resistance, now it's support. Look at the Dow INDU intraday. It's got a ton of resistance levels from 24,500 to 24,800. So it's still got a little room on the upside. The S&P automated Chapman wave. Look at the resistance level 2973. We're at 2931. So that can go a little bit. Where's that 120-minute chart right there? 2956 to 2946 is the 120-minute chart resistance. Look at the QQQ, NDX 100, 224 to 224, a lot of resistance there. And we're at 225.69, so it's kind of open after that. The IWM automated Chapman wave resistance level 133, way up to 127. It's at 131.74 right now, so it's bumping into resistance. So I just wanted to show you that we're starting to see some kind of resistance levels. This is actually spectacular. I don't know what the story is, but a spectacular move up, Dow up 717 points. That's really good action. Bobo's coming out with earnings later on in the week. It made that 1-to-1 extension. It's at 211. It's trying to test the all-time high, all-time high of 216, I believe that's the high. No, that's the most recent now of 216. And a question I had here was XLE. So the XLE should be seeing some strength. It is, and it's got to get at 38.52. It's got to get to the 39.70s. That'll say, hey, that's a bit of a breakout. That's good action. I'll be back at noon time for my show. Basil Chapman sitting for Larry Pesavento, Trade What You See. Sorry, Larry, I couldn't take your phone call. I really apologize for that. And I'll be back at noon. Otherwise, see you tomorrow. Thanks.